We're starting out a little bit in red. However, that could change. Investors, or Wall Street specifically, is waiting for a couple of key data, economic data. What is that? First of all, we have a Fed governor talking, okay? We have an ADP employment data, and then we have jobless claims. Those should be coming out in the next 15 minutes, 15 to 1 hour. Then we have a very important one coming this afternoon or early afternoon, which is the Fed minutes. Okay, so Wall Street's going to be digesting that, seeing if Fed Chair Powell said anything behind closed doors that he didn't reveal publicly with his last press conference. Generally speaking, minutes don't show a whole lot, but sometimes Wall Street really nitpicks and tries to read between the lines, and it could cause some volatility. But also the ADP jobs report and jobless claims, let's see what happens. Yesterday, what really prompted everything to go down was the job openings number, right? It was actually good, but Wall Street didn't like good because they want bad at this point. So we'll see what the unemployment number says today, and also jobless claims, right? They will be important, pretty important. Also, yesterday, you guys know that a lot of people got liquidated. That was also another reason why everything came back down so fast. We had over $700 million worth of longs liquidated within a single day. Shows you the type of greed that's out there. This kind of liquidation didn't exist in previous cycles, but this cycle, everyone is getting involved. But what we need to see is the opposite. When we do pump up back above $100,000 and beyond, we'd love to see more red or more shorts get squeezed and liquidated, not the longs, but that's exactly what happened yesterday. We had a whole bunch of people get wrecked yesterday once again. Like I've been saying, you don't want to be left behind. Even Fidelity is sending that warning. Okay? Actually, this is written for nations, sovereign states, not for retail investors. No. So Fidelity is now saying that, hey, because there's a lot of talk about countries making a strategic reserve of Bitcoin, including America, of course. And there are many other countries that, or politicians or leaders that have started saying the same thing. You know, now Fidelity is warning that other nations that are not thinking about this and not going to implement a strategic reserve, they will actually be left behind. And it's for the same reasons I've been telling you guys. Because once the FOMO train hits among nations, there's not going to be enough to go around. I mean, I think people still don't understand how scarce Bitcoin is. There's very little left to be mined. Every single thing that's out there now, every single sat Bitcoin is being eaten up. And once the countries really start FOMOing in and putting their billions and trillions in, it's game over. And countries that are left behind, not holding any Bitcoin, they will be worse off for it. They will be left behind, even more so. So, if Fidelity is saying that about countries, well, what do you think about, you know, companies and retail investors, right? We should be following. It's the same principle, same idea. We don't want to give up on it. Bhutan is doing that. Not only Bitcoin, Ethereum, BNB. Actually, BNB. They're a small little nation that have adopted Bitcoin and crypto, right? But we got Thailand, at least one of their major city, Phuket, that is going to be allowing Bitcoin crypto payments, but Thailand overall and many other Southeast Asian, countries and Asia itself. I mean, everyone's just getting really bullish. South Korea recently with all the drama over their president and martial law and everything, and then the new president being impeached too. I don't know what's going on, but they are a very pro-crypto nation, and now they're going to allow corporate firms to invest in crypto as well. So that is big too. So not only are you going to have countries embracing Bitcoin, putting it into their strategic reserve, but also the regulations and laws are turning a lot more favorable worldwide. And in the US, we have many states. I've heard last count was 13 states that are also trying to come up with with a new law or whatever they're trying to do to also add Bitcoin into their reserve and make it a strategic reserve. This is state level. And we may be getting a 51st and 52nd state soon. Yeah, I don't know if you guys have been following everything that Trump has been saying and proposing. Canada may be the 51st state, and then Greenland may be the 52nd state. So we may get 2 new states in the U.S. pretty soon, and basically all of North America will become just the United States of America. Even though yesterday was a pretty, down day, you have massive outflows from a lot of these funds, but not BlackRock. Larry Fink's like, enough is enough. I'm going to start accumulating. So yesterday you would figure it would be a pretty negative outflow day, but overall we still had a net positive 52 million inflow, and that's thanks to BlackRock's close to 600 million inflow, right? So again, ETFs still having a big effect long term as they contribute to the supply shock, and they're just eating up more and more and more, hundreds to billions upon billions of Bitcoin, taking it out of circulation. And I've shown this before in case you have any doubts, in case you're Peter Schiff or anyone else that still loves gold, or let's say loves gold more than Bitcoin. This is the difference in demand. IROX or BlackRock's iShares Bitcoin ETF is nearly double the AUM of gold, and it's only been out for a year, while gold's ETF from BlackRock has been out for decades. That shows you going forward, this is the appetite. This is a real world example of appetite for Bitcoin versus the appetite for gold. Gold may be going up. It's not going really anywhere quickly. Bitcoin is skyrocketing to the moon. That's what this is showing. And it's going to continue to do that. It's not going to stop.